Welcome to all of you in this late afternoon session. Very happy to be discussing this with great experts from the energy field. As mentioned, I'm a generalist investing in early stage companies and had the benefit of investing in electricity distribution and got confronted kind of deep into some of the issues and solutions to alleviating energy poverty. A few years ago, so first disclosure for the women in the room that I offered my place so that it wouldn't be an all-men's panel. Unfortunately, that didn't happen, and I think it's actually a topic in the energy sector where women representation is pretty low. So in our company, we actually worked a lot on being 2X compliant. 2 years ago, I did the same panel, and we actually had someone from NG here. NG had made the biggest acquisition in Pego Solar, right? And 2 years ago, the guy was saying that it was not a sustainable solution. Doesn't come from me. It comes from NG. And I was surprised by the comment in a panel, at AFSIC. 2 years down the road, the continent has evolved with a lot more government intervention. Governments are showing muscle. I think it's a great thing. I'd love to hear what you guys think about it. Showing a lot more intentionality, renegotiating, offtake tariffs, promoting heavy investments for industries that will enable full access to energy. At least that's what we hear. We'll be very happy to hear from the panelists today if that's what they see and how the future will look. So without further ado, I'm pleased to introduce to you Sébastien Duquet, director at Mirova, a leading investor in the energy sector. Anish Jain, group CEO at Active Holdings. And Joao Germano e Silva, did I get that right? Yes. Business Development Director at Mitrelli. I will maybe let you three introduce yourselves because you'll do it much better than I, and then we'll follow up with a few directed questions. Sébastien?
Okay, so Sébastien Duquet from Mirova. So Mirova is a 30 billion impact investing asset management company. What makes us a bit unique in the market is that we do all kind of asset class, from listed to private assets. So we manage 25 billion of impact investing strategy in listed investments, so green bonds, sustainable equity. And in private asset, we are active in both private equity, renewable energy, and natural capital solution, both in developed and developing countries. So we are a bit global. Global by our presence, global by the category of investor. We do manage retail funds, or UCITS funds, that are predominantly distributed by our shareholder, BPCE, Banque Populaire Caisse d'Épargne, the second European largest bank with 13 million of clients throughout Europe. But also we have access to classical institutional investor, etc. On HAMI particularly because I design, structure, fundraise, and manage the Gigaton Fund. A fund that finances renewable energy through private debt in sub-Saharan Africa for 2/3 and Southeast Asia for 1/3. And I could elaborate a bit more what we do that. And similarly to Maxime, normally I should not be able to speak because our policy is that we don't speak in panel where there's less than 50% of women. I offered that my colleague John, but you are speaking in another panel. So don't take pictures, otherwise I may be laid off. Or at least I will have to comment and ask a waiver from the compliance. Our fund at 2X challenge, definitely, and it's something that matters particularly for the topics we have, eradicate poverty. We know that it goes with women empowerment, education, and plenty of other things, and access to energy is one. But I could elaborate more after.
Thank you. Jain, you want to go next?
Thank you. Good afternoon, everyone, and it is overwhelming to see a room full after the lunch session. My name is Anish. I am the group CEO. We are a diversified business house present across 15 countries in Africa. We have invested more than $4 billion across different sectors and industry. We particularly do infrastructure, power and gas, electric vehicle, and we also do plantations and mining. Across the continent, we are present across 15 countries. And we have a gigawatt turn plus portfolio on the energy side. and we also do gas transportation and supply to industrial zones and industrial clients. Look forward for this discussion. Thank you.
I'll be the last. My name is João. I'm working in Mitrali Group, a multi-sectorial group based in Angola. I'm Angolan myself, so I try to represent, let's see if I can represent the African voice in this panel. Mitrali Group has a spread footprint through the continent. We've been working in the continent over the past 30 years. More than $1 billion of projects implemented. And when I say implemented, we developed them in different models, EPC plus F, as an EPC, as investors. Most of the projects, they are running until today, so we are a very proud partner of the uprising of the African continent on the last 10, 15 years. And we are looking for the future, and of course, energy is a drive for this growth that we expect to witness in Angola in our lifetime. So I'm proudly represent a group of people that works in numerous geographies. We are present in Switzerland, where we have our headquarters, also in Portugal, in the UK, Cyprus, Angola, Ivory Coast, Senegal. We are spreading also to Uganda, Mozambique, and we are increasing our footprint. We have a large women structure in our company, I would say most likely more than 50%, and very strong ones for sure. And I was lucky that I was allowed to represent them also here. So I'm speaking on behalf of Mitrali, which is also a huge integration policy company. So I'm comfortable with that.
Great. I'm happy that everyone made the appropriate disclosures. So maybe we can start kind of high level with the topic I introduced at the beginning, which is, a few years ago I think we would have talked a lot about solar off grid. We would have talked about mini grids, and I'm actually interested to hear from all three of you what your views are in terms of evolution. Maybe it's not today, but what the trend is. Do we see more, is it easier today to build these large-scale projects? Are we more talking about large-scale projects today than we were before? Especially from the private sector side. Is the private sector now better equipped to work with governments? Are governments better equipped to work with the private sector? And are you seeing this? And maybe we can start with the same order, maybe Sebastian first.
So I will give the view of what I'm doing at Mirova, which is predominantly structuring fundraising for funds. My colleague Rima Zirar, that's speaking on the panel, is better placed for giving our view about where the market is doing, etc. She's an investment director. But what I want to maybe say from a private investor perspective, because every day I speak to private investors to convince them to invest in our funds. Our sector is generally still perceived as very risky. And particularly the part that is attached to a solar home system, agri-solar equipment, etc. Because obviously, when you look at the probability of default on the historic default rate, that's where you have had the highest level of default. So when we structure the Gigaton fund, so that was a fund I structured in July, summer 2022. And then to calibrate, it's a blended finance fund, so with a first loss. So to calibrate the first loss, I basically analyze in deep the default rate of the sector for the last 10 years. Using the statistic we had. At that time, we're still working for some funder that was integrated in Mirova, but the funder had a 10-year history in that sector with a lot of data, but we also coordinate with Microfinance Rating, Google, and many others to have statistics and to build on that. I'm not coming from that sector, even if I was doing a bit of energy at responsibility or symbiotics. I'm predominantly coming from the microfinance space. So that's why I did this very neutral. It wasn't my portfolio that default, etc. And it's true that if you look at the solar home system, globally, even if there have been progress in the way those organizations are managing the growth, in the way they are managing the credit risk assessment of the potential beneficiary, you still when you do due diligence, and for those of us like Maxime and I that come from the microfinance, when you look at those organizations, you still feel that the overall credit risk assessment internally is quite weak. At least when you have looked at a very strong microfinance process, you are quite surprised, and sometimes I'm a bit afraid of what they do. They still have relatively aggressive growth, and this translates basically on sometimes the logistical chain is not ready. So it translates basically, when I structured the Gigaton Fund, in calibration, that was my personal view, using the statistic I had, of a probability of default of 15% for this sector. Meaning 1 out of 5-6 investments end up in restructuring, and with relatively low recovery rate, meaning maximum recovery rate we had historically was more 40-50%. So meaning a final cost of risk of 6-7%. So when we lend 100% to this sector, my statistical approach was I will lose 6. The agro sector, water pumping irrigation, was even higher in terms of probability of default on the losses, so around 2-10. While if you look at commercial, industrial, solar equipment, or telco, here, on the contrary, we had very limited risk so far, so probability of default was more 5 or 3%, on the end cost of risk was 1. So that's why altogether, I had to calibrate the fact that for convincing private investors to invest in this sector, despite 20 years of track record, because personally, when I joined Sunfunder, they told me the first solar home system were created in 2012, which is not completely true. When I was doing macrofinance in Morocco in 2022, there was already some financing of solar panel equipment at the farmer level by macrofinance institutions. So we have 20 years of track record, but still, you have to design fund with 15% of first loss taken by someone, government, foundation, etc., to convince investors to join because the risk are there. And actually, so we launched the Gigaton Fund, we find those first loss, we still miss a bit of first loss to be at the scale we want to be, which is 400 million. So today we are 300 million, we still need 10, 15 to be able to unlock private sector. On private sector, it's always a challenge to explain them the risk and why you believe you have enough with 15%, but okay, generally you are still able to demonstrate. You are not able to rate the underlying asset, you are not able to rate the notes you're offering to private sector, so that's why also it's a limitation to grab, but generally you are able to make it. And since we launched the fund, actually several of our existing solar home system investment in our 2 former funds, BTG Fund and SET Fund, defaulted since then. We today don't have any default in the Gigaton Fund, but we still have had default that happened in between. So I'm even asking myself whether I wasn't maybe a bit too optimistic with a 15% probability of default, whether maybe it's a bit higher. And actually, in one of those defaults, relatively large, that a lot of the industry enjoy, we have today a recovery rate that is pretty low, 20-25%. So maybe even this calibration was a bit optimistic. So that shows that, yes, expediting investment, convincing people to invest there, we are not ready. Surely for us, for instance, we will never tell an insurance company like Allianz, AXA, LNG here that have with us, for instance, LNG, they have 1 billion with us in our listed strategy. So if we come to convince them to invest in the fund like the Gigaton Fund, they will be sure that if they invest, it takes no less risk for them, because otherwise it puts in danger the 1 billion we have with them in other strategies. So that's why they also invest so massively in our blended finance fund. But we believe we still have to really have those protections, otherwise no private sector will go there. For CNI and telco, it's a different story. And then you have some new sectors that are popping up, like e-mobility, battery storage, where obviously, similarly, we lack completely any track record, historical data. And what I see from this industry, and I will leave the floor for others, but compared to what I experienced in microfinance during 20 years, is that what we have done in microfinance with the World Bank and many others, and some of you may be familiar that when we structured the microfinance industry, we created a rating agency, we spent a lot of time on internal control policies, on audit and everything. And a lot of those elements are today missing in this sector. so that we could probably better flag exactly the kind of risk we are having when we are lending to such organizations. So that's also a limitation for scale. So from a pure helicopter view on someone that is not on the ground, on the rim, my colleague is there and she could comment a bit more, but it's still perceived as quite risky. On the risk happen, on the first loss has been used. We have to say that also. The previous fund we are launched in that sector, the first loss has been used, so it shows that there have been defaults, there has been difficulty, and if it has been used, it has been also used for the project that were targeting the more poor part of the population with the more deep solar home system organization or agri-solar equipment. So we fulfill our mission as impact investor, but with some credit risk.
Thank you, and I think that's a good transition because Anish, I know within your group you have all types of projects. You have Spyro with the electric mobility. Is electric mobility the new PAYGO or not? The big question that everyone is asking themselves. And I think it'd be great to have your insights on that and where you see the future of energy in Africa.
No, thank you, and I think I value the views Sebastian mentioned, and we see a spectrum of projects that we develop across Africa, and I probably categorize into two broad parts. One is the solar projects that you do, and one is non-solar, where we also develop projects which are combined gas cycle power plants. And what we have seen when you are doing solar projects, and specifically for C&I segment or for private use, they are much less risky because you have a lot of factors that you can control in-house. But on the other side, when you are doing projects which are meant for government and you are assigning under a PPA, there you have to deal with the governments, and each government acts differently. I'm sure you have seen in Angola and many places. Especially if you see the western and the central part of Africa, the defining of the PPAs, the allocation to the grids, also the percentage of the electricity that the grids can take, that varies from country to country, even from state to state. So those kind of operational challenges make sometimes the project a bit more risky in terms of their own viability. And the second element which plays a role is availability of right funding. Specifically for solar projects which are typically done under a 25 years PPA arrangement, if you as a developer, if you as an operator are not able to get the right financing done for the project, then it probably puts the entire project at a risk. But we have seen that certainly there is a lot of potential for Africa to develop, and we work with a lot of governments where we also do policy advocacy for them, where governments would like to understand that how other countries have done in Asia, how other countries have done it in the western part of the world. And we bring those elements that how other governments have standardized. Like for example, I'm sure many of you know, Indian government is doing more than 50 gigawatt of solar projects in next 5 years. And the process is so standardized that you do and go online bidding and you bid, and the PPAs are standard, the banks are already tied up. You as a developer, you just need to have operational excellence to come and execute the project. The tariffs are well defined, the PPAs are pre-negotiated with the government, you just sign and move on. So I think there is a long way for Africa to reach that level where it provides that kind of an investor confidence that people can come and execute projects. In Africa, each country is different. Non-standardization of terms, non-standardization of financial closure of the projects make it difficult. But we are extremely confident that in next 5 to 10 years, these governments will start adopting what others have done to streamline this whole process. So we are quite optimistic of the whole thing, and there is no other way but to continue pushing it to streamline. Thank you.
And Joao, you are a project implementer, so maybe you can give us your feedback on what are the difficulties that you encounter in setting up these projects, so similar to Anish, and specifically in Angola, I understand, or throughout the region?
Throughout the region. Taking from Anish and also from Sebastian, there are very interesting points. It's true, as a continent of 54 different realities, it's a big challenge. The needs are there, that's very clear. The continent is growing, the demand is there, and there's a huge lack of infrastructure. although Anish mentioned two of the main investments today from the private sector, which is the solar and the combined cycle production. You also mentioned the lack of infrastructure. So taking your investment to value is a big challenge. Africa cannot expand the infrastructure solely on government funds, that's for sure. And then that's where the private investment opportunities rise. But then you have the risk. So I think we need to think a little bit out of the box. We need to be creative and how to de-risk the operation, working together with government's risk and private risk. And we see that as an opportunity. What we do, we try to bridge this gap between the risk, the market needs, the willing to invest. There's a lot of money available. Africa, for sure, is a huge target. We need to balance the growth of the African continent towards the Western continents. Otherwise, it will be a social problem in the future. So I would say that worldwide, it's of everybody's interest to balance world economy. So how do we match it? So with the money in the West, the companies like ourselves and many others in the ground, and knowing the market, I think we can find solutions to bring this money and de-risking it. It's a challenge for sure. We need to have the governments and more flexible financial solutions, but that's where we come. I think if we look today to Africa as a whole, we need to work as a continent and not as individual countries in terms of regulation. We need to implement, I would say, a spread terms for PPAs, for commercial agreements. So we have that balance that Sebastian was mentioning. We need to balance the continent as one. And we must lead by example. So I would say, like some of geographies that we are working, this example has led to some success. We are not defaulting as much in Angola, for instance. Ivory Coast, Senegal are also in a good position. Some emerging economies like Rwanda, even Zambia now with the Lubito corridor has a huge opportunity to change that financial situation. And I think companies like ourselves will be there to help. Hopefully.
No, great. I'm listening to what you are saying and looking at the title, right? Expediting investment to eliminate energy poverty. The question that comes to mind is, okay, for $1 invested, what's the energy poverty reduction that we're getting in these different I guess products or types of energy. And I'll give you an example. So our portfolio company, Beacon Power Services, they help utilities reduce the losses in the distribution. And in Africa, you lose between 30 to 50% of electricity in the distribution, in urban distribution. So if you're able to reduce that to 15%, well, they help their clients, the 6 utilities, earn more than $600 million last year, and it's on a recurring basis. And one KPI is in Lagos today, you have 4 hours more of electricity than you had 4 years ago, thanks to the optimization of the grid. We're a long way still from perfect electricity in Lagos, as everyone that has been to Lagos knows. But there are significant gains that touch a city of 20 million people, right? So in your view, individually, what is energy poverty and what's the efficiency of the services and the solutions we're providing? Are we efficient in electric mobility, for example, today? Or in off-grid, is it, is also the cost of electricity really enabling reducing the energy poverty, or is it a temporary solution? I'm being provocative because that's why we're here for, and I think it's probably a mix of all of these solutions, right? But I'd love to hear how KPIs that you're looking at and how you see the progress we're making.
So I will let my two colleague panelists complement on the as a provider. They are better equipped than I to comment here. As an investor, I think what we are doing quite okay is to try to standardize a bit the process, to try. We are doing okay to try, but we're not succeeding in doing it. Because if I look at our transformation from the pipeline to the investment we do, there's still a lot of projects that are falling apart, that are not part of it. And it usually goes with the structuration of the deals, the PPA, the legal requirements, and many other elements. Lack of equity for some time. But at least we try. What we are doing at Mirova Exxon Funder is always to innovate and scale, to try to still find new solutions, take risk with those solutions, and to accompany them to the growth. It was the case in the past with solar and system, with a grid, CNI, and today maybe with e-mobility and other. And I think this we are doing pretty well in a sense that by such we are enabling solution that works, like sun culture, a small loan to start water pumping system, and then when it worked well, to provide them 10, 20 million so that they could grow and provide more energy to people that miss the access to energy. I think we could still try to go a bit down with smaller investments, smaller ticket on the private debt side. We usually start at 5 million, and I think there's still a lot of projects for 1 to 5 million that are of interest that maybe could scale in the future that we are not necessarily looking at. And I think the team is generally scared of looking at them because of the time it takes to make them an investment case for us. So that's probably where there should be help coming from either fund that are specialized in those topics with a specific transaction cost, because obviously those projects need a lot of support or some investment readiness solution or whatever, or as I said, rating or something that could help us more efficiently finance those initiatives, those projects that I think from a credit risk perspective might be a bit more risky, but we are not even able to assess that because anyway they are too small or not ready, and that's why we don't look at them. So that at least there could be a mushrooming number of interesting projects, and then several will scale, and we could, by such, have more initiative to eliminate poverty. At the fund level, because our funds are financed by development finance institution, government, and foundation, we have a strong push to go to less developed countries. And sometimes we are even asking them to waive a bit those requirements and to be able to select more ourselves, the project we want to finance or the country we want to go. But we have to admit that it's also an encouragement for us not to be lazy and to try to still go where energy poverty is highest, and obviously it is in the less developed country. So I think there's generally a push to encourage through those catalyst junior share investor, a push for us to go there. So if you talk the Gigaton Fund, for instance, we have a minimum investment to be performed in Africa on the minimum level of investment that should go in less developed country. So even if we have very interesting project in UMIC or LMIC, we will have still to target less developed country because the energy poverty is there. So I think this is possible because they come also with the capacity to take the first loss in those less developed countries. So I think this mechanism works quite okay. Where I see some improvement is probably still on standardizing, as you said, the investment, so that for us the process could be much more quicker. We could disburse more easily, and also trying to find a way so that we could take more project for 1 to 5 million. I'm not saying more risk because actually we don't know if they are risky. We are not investing. And technically, nothing prevents us from doing it. It's, if you look at our fund documentation, nothing says we start at 5. No. It's just ourselves. We say, oh, 1 to 2 million, if it takes 20 months to do it, it's a nonsense, you know. But if there would be a way to have 10 projects of 1 million each, we would be super happy to do that very quickly and to disburse. And I don't think we'll take more risk anyway if the shareholder of the Catalyst Junior share data development agency and foundation are okay for taking it, and I'm sure they are, we could deploy that. So I think that's where we could be much more efficient.
Well, for being a fund manager myself, I hope there aren't pipeline companies hearing that.
No, there are many pipeline companies. The problem is that today, if they come to us, we'll say, sorry, if we start at 5 million before, we are not equipped internally to do that.
And you'll agree with me that in microfinance, we were able to do those smaller tickets, and it made sense. So it comes back maybe to your point on understanding the internal controls, streamlining internal controls, having references as investors, to be able to also give guidelines and make that process quicker rather than reinventing the wheel every time we do a due diligence.
Exactly.
So that's for sure. And I'm not skipping you, but when Anish, but when we spoke earlier, Joao, you were pretty caught up also on timelines. So I want to give you the mic because I think you had something to say about timelines.
Okay. So I'll be challenging a little bit our perspective. Energy poverty. So are we poor when our table is empty, or are we poor when we don't have money in our pocket? Africa is not energetically poor for sure. Maybe Germany. They have a problem now with the Nord Stream, and they're taking energy actually from Africa, right? So we do have the safe full. We have a poor energy experience, which is different from being energetically poor. We, in Africa, we have enough hydro resources to feed Africa, to feed the increased population in Africa, and still export to Europe. So we are not poor. So we just don't have the food in the table. And this is why we are here, trying to bridge this. So it's a challenge. It takes a lot of courage. We have to face a lot of risk. So the thing is, we need to expedite. So it's clear we are not taking energy resources from elsewhere, from Asia or America or Europe, to feed Africa. The energy resources are there. We have the hydropower, we have solar power, we have wind. We don't even need to go nuclear, like I would say it's the ultimate resource for everywhere else in the world. And we can even feed our neighbor continents. We sure can feed Europe as it is being produced today. So I think we need to focus on optimizing the production. Today, I live in a reality. Angola has a surplus of more than 50% of production. We lack a lot of distribution, transmission infrastructure, but we do have the production. So there was a vision in place in the past that will allow Angola and the neighbor countries, like the connection with SAP to connect South Africa through Namibia, so feeding Namibia along the way. Also Zambia now with the Lobito Corridor project, and Congo in the Katanga region. So we need this vision to support the reach of energy through the continent. Not the vision that we are poor from the energetic perspective, is how can we take the value out of the potential of energy, and how can we do it fast? So we need private investors, we need the government securities, we need DFIs to come with more expedite products with guarantees, with concessionary funds that will allow us to expedite, to get out of this long-term evaluation process and put projects in place. Africa is ready. We have the capacity, we have the needs, and we have the will. So let's bridge it if we can.
And I think there are already, this isn't the future. There are examples. I don't know if there are government representatives in the room, but it'll be happy if there's a Q&A session. It would be great to get their input. I think there are great examples already in Southern Africa. The interconnection between Southern African states is working very well, or increasingly well. A few months ago, I was in front of the Minister of Energy of Kenya, and he was in front of a room full of people that are maybe around here, developing CNI projects in Kenya. And as many of you may know, there was a moratorium on offtakes in Kenya for a while. And he justified the moratorium saying, well, you know what, now we're connected to Ethiopia, so instead of paying 12 cents on your CNI project per kilowatt, we get from Ethiopia 6 or 7 cents per kilowatt. So how do you compete with that? Because as a government, my job is to give the cheapest electricity to my population. It's not to please international investors, and it's not to just make IMF policies. So, and I think there are examples, and it's kind of what I was hinting at the beginning. I feel like we're seeing more and more examples of this pivot of more engaged governments. Obviously, maybe some projects will not benefit from it, but I'd be happy to see on large scale projects. Do you see positive in that? Do you see opportunities from government involvement at your level?
Yeah, absolutely. And I think, Maxime, this is a very interesting topic and question to really respond to, because I know Sebastian and Gico, they have mentioned more from the energy surplus or energy deficit point of view. But I see it slightly from a different lens. When you look at the economic development impact that energy creates in a country, it's a proven fact, and it's studies that shows that every dollar which gets invested into energy resources returns and generates $3.4 for the economy, and then the cycle continues. The GDP growth rate at which many of the African countries are growing today, they are probably clocking somewhere in the range of 6 to 8%. So at the same growth rate, if they get the energy deployed year on year to augment their industrial growth, it will allow their economies to double every 8 to 10 years. Now, if they don't have energy, the whole economic cycle will be broken. The topic that you mentioned is linked with the poverty. Though in the literal sense it's energy poverty, but if you extend it to the countries and you talk about how energy and electricity is changing the world, and you mentioned about Spiro, which is our EV company, I can tell you, when we enter any country, the first analysis that we do is total cost of ownership. And any country where we are not able to offer 40% more income in the hands of the rider, we don't enter. And the whole premise of entering with the electric vehicle is how we can make transportation safe, pollution free, and most importantly, more income in the hands of the rider. You mentioned about Kenya, or you mentioned about Angola. Now, if you look at Kenyan economy, there are more than 1.5 million bike riders who are boda bodas. And the typical income, daily income, is around $3 per day. And now you imagine that the same guy will start earning 40%, 50% more income per day, which means just over $1 every day that he's earning. Now you multiply that effect, 1.5 million people earning $1 a day extra for the multiplier effect of the full year, and how much that money will create surplus for them, better education, better healthcare, and better standard of living. So energy should not be seen only as a standalone power provider for industries and large-scale businesses. The impact that it creates at the bottom of the pyramid is huge. And when we start addressing that kind of bottom of the pyramid, it creates the extensive multiplier effect. So that's how we see the role of energy in the countries going forward.
Maybe, Maxime, to rebound a bit on what you just said, Arish. When we structured the Gigaton Fund, our thought was to mutualize the fund to convince private investors to invest. So that's why we wanted to be quite comprehensive in the sector we finance. So we decided to do solar system, plus off-grid, plus CNI, plus telco, plus e-mobility, plus battery storage, whatever at the end of the day could come with one tool, private debt only, but still a broad approach. And this means a broad approach in terms of impact as well. All those sectors have different impacts. If you invest, for instance, in a CNI, then you know you could have a relatively good impact in terms of economical development, because you could help the SMEs to get an affordable access to energy, and then a restaurant, hotel could scale, etc. If you are on the solar home system, it's at household level, but it has a spillover impact. If telco may have some impact somewhere. So what we design is to say we have to look at the impact of all those sectors and to try to categorize them in 3 dimensions: climate, CO2 emission, reduction and the like, economical development, how much of SME, how much of we are enabling them to get access to energy, job creation, job supporting, and access to energy for vulnerable population, particularly women, as a social impact. So we measure the impact that the fund have on those three dimensions. And for us, the three contribute to the poverty energy fight somehow, because as you said, you could not say that telco is good for that, but bad for this. It's good for that, and that's it, you know. And that's why we believe we should work on all those dimensions. But to report properly toward the investor, you have to be very clear of what each of the segments bring in terms of impact, what are the metrics you are using, and it's quite some work for us. But that's how we have designed it. So also the interest was to have a large fund so that you could attract large investors, because if you go to speak to private investors, already we are only at 300, which is quite small for a large institutional investor. It will be better if we will be 500, but below 300, it's really too small. And to reach 300 million, you have to mutualize the profile of the project we finance. So there was a beauty in terms of impact that was hopefully also great for attracting private investor. But that was our way to treat this subject of different sectors with different impact on different metrics. And it's some work for the impact team. There's 2 persons full-time dedicated to the ESG and impact for this fund, or one fund only. And luckily, we are 30 at Mirova in the department for impact on the ESG, but 2 persons for one fund, it's quite staff-intensive somehow.
Thank you. That's details and benchmarks. No, thank you. I guess we have less than 5 minutes, so I don't know if there are any questions in the room for these great panelists. I have a last question, if there are none.
Sorry, yeah, me again. I was just wondering, because we heard a lot about regulation and some of the challenges that happen in the fragmentation in the African markets, but would the best solution from your perspectives be like a Pan-African approach, or do you guys approach it from a more regional perspective, or is it country by country?
Maybe I can go first. I think probably we will go one level down, not even country by country, but it is by city or state by state, because the policies, the way they are designed, the deficit of energy, if you see in certain parts of the country, they are very different. So if you try developing a Pan-African solution or even a country-wide solution, obviously Nigeria may not be the best example, but even if you see country like Kenya, the energy needs in a particular region of the country are very different from maybe up country north or down south. So it needs to be very localized solution that allows the energy needs to be fulfilled, and then it's like a controlled democracy. When you start somewhere, then you keep expanding into other parts. Like you mentioned that we are, let's say, trying to supply to South Africa, and then on the way, everyone will get access to the power. So that way, from a small area, when you continue expanding countrywide, and then you probably move to the border areas, then it will give the best solution. That's what we have experienced and seen.
I'll give you my African approach. I'm a strong defender of Pan-Africanism, so I always, something I usually say, people who work with me, I hear this a lot. We cannot let the urgency of things stop us from thinking about the important things. And for sure, it's urgent, this localized approach, but the strategic approach must be Pan-African. So as we look for the future, for the next 50 years, there must be a Pan-African strategy that will be implemented step by step in small niches, in broader spaces. The evolution will depend on the region, on the local energy assets. But the vision and the strategy, in my perspective, should be Pan-African.
That will be the word of the end. Thank you very much.
Thank you.
Thank you, guys.
Thank you very much. Yeah, thank you.